Hi everybody and welcome to the London session update with myself, Kathleen Brooks, on Wednesday the 8th of August 2012. Well, this is a Bank of England inflation report special. We had the new inflation report this morning, and to sum it up in a nutshell, it was a lot less dovish than what we had expected and what others had expected in the market. Hence, we've seen the pound react very strongly or strengthen on the back of King's speech. So what are the main highlights of the message that he delivered? Well, the first thing was that, yes, we have had some very negative growth out of the UK, but it's not giving the full picture. That actually King believes that the underlying weakness of the underlying UK economy is not as weak as the headline figure suggests. Remember that 0.7% contraction for the second quarter, he thinks was exaggerated by the extra bank holiday for the Jubilee Bank holiday weekend. And also some weather-related factors, that terrible rain that we had throughout June. So he didn't seem too worried about that and actually suggested that, well, really, we're flat. We're about flat with growth, which is much better than that 0.7% contraction we had expected. Likewise, he also delivered another positive message in the sense that inflation is coming down, which could see a gradual pickup in consumption. Now, that is very positive as well, because remember, inflation has really been one of the banes of not only the Bank of England's life, but also the consumer's life. As that was another tick in the box, if you like, for the UK consumer, for the overall UK economic outlook. And even though he said that there was still a lot of headwinds for the UK economy, including the Eurozone debt crisis, he didn't produce any new bad news or any fresh bad news, and this was warmly welcomed by the markets. Now, sterling rallied immediately. It's been one of the strongest currencies all day. The first thing it strengthened against, of course, was the pound. Was the US dollar, sorry. And it broke above that 156 level. Easily broke above that 156 level to about 156.50. However, to see whether or not we extend gains up there, we're really going to have to wait for that Jackson Hole speech by Ben Bernanke, which comes at the very end of this month, so the 31st of August. And I say that we have to wait because really we believe cable upside or pound US dollar upside is limited because we don't know what the next policy step will be for the US. Now, the first chart I want to show you, this is 10-year UK yields, which is the white line on the chart, and 10-year Spanish yields. And as you can see, the pound is still being treated like a safe haven. Now, we didn't see a strong reaction in the gilt market today, with gilt yields remaining incredibly subdued, even though the Bank of England was less dovish than expected. And the main reason for that is that we're still seeing sovereign strain. So the UK gilts are still being treated as a safe haven. Now, that has big ramifications for euro sterling. As you can see in the chart in front of you, that's the daily euro sterling chart. We've had a nice bounce lower. Now, that pair got really stuck around that 79.60 level, my apologies. That's the 50-day moving average and is a key resistance zone. So we fell off of that, we fell away from that. And the next levels to watch out for, 78.80 and then 78, two key levels. So do watch out for that and do join me tomorrow. Thank you, everybody.